It was a satisfactory year. I think we saw very good loan growth. We saw good flows into both our wealth business and our asset management business. Funds under management are up in stable currency. We've continued to penetrate our markets. We're seeing good activity from our clients, and we have very good people who are meeting our clients' needs. So overall, we're quite happy with the performance under the conditions that we faced. The specialist bank has performed well. We had good loan growth, UK up 10%, South Africa up 19%. We're seeing very good penetration of our client base, and our risk parameters have not slackened. We are very disciplined on the risk front. However, we do believe we are penetrating our market and we are operating well within our risk framework. We also have seen the launch of some of our digital offerings, which we continue to enhance. They are well received by the market and are positioning us very well with our private client base. So overall, we've seen good levels of activity and continue to penetrate our markets. Overall, the asset management business was affected by market conditions. You had weak equity markets and a weak currency, and that would have affected the funds under management. However, they did have £3.2 billion of net inflows, and last year we had some negative flows in the African business. This year those flows turned positive. So momentum has turned. We see momentum as positive, and a lot depends on where markets are going. But overall, the mood in the business is good and momentum is positive. This is a very good business. We're seeing very good implementation of our strategy. We've seen strong growth in both the South African business and the UK business. The South African business grew by 19% in this period, the UK business by 8%. We've continued to collaborate with the private bank, and we get a lot of inflow between both businesses. We believe that this business has big opportunities both globally and in our core geographies, and it fits in very well with our banking business in terms of the type of clients we serve and the target market that we go after. So we believe that this business potentially has very strong growth going forward. It's also will launch its digital offering in the UK in the autumn of this year. It's an online, we call it Click and Invest, and this is a whole new offering that will link very well in with our digital offering in the private bank, plus our face-to-face offering in both businesses. There are a number of elections that are taking place over the next while. We have the municipal elections in South Africa. We have the presidential election in the US. We have a general election in Australia. And then on top of that, we have the Brexit referendum vote on the 23rd of June. These times do create uncertainty, and people then tend to sit on their hands and not be as proactive as they would do when they're confident. But we had to serve our clients and we had to support our clients, and we also have an organization that is able to navigate difficult conditions. So overall, we're quite comfortable with where we are. We have over a long period of time been trying to drive capital light activities to build our ROE and to create a more sustainable model without the need to go to the market for equity. So this is something that we're continuing to do, and we've seen very good progress in terms of building that capital light business over the past 5-6 years. It's not only in our asset and wealth management businesses, where already our bottom line is 35% as opposed to 20% if I went back 7-8 years. It's also in our banking business, where we're building our transactional banking capability, our advisory capability, our manufacturing and distribution capability, all which are much more capital light than lending. So the mix of the business is important to us, and we will continue to strive to build the capital light side of activities. In fact, net interest income is only about 29% of our overall income in the group. Over the past while, we've been trying to bring the youngsters through. We had a very good professor from London Business School who took us through a process, and he talked about the concept of old dogs and young puppies. and we've now been pulling the young puppies through. So what you would have seen in our November release is we did announce a whole lot of management changes and appointed CEOs and heads of global businesses. And below them, these were our next generation. Below them, all the youngsters are starting to come through. And these youngsters are, you know, late 30s, early 40s, a lot of energy, a lot of drive, and actually helping us service our customers well, helping us create new product, helping us innovate. So we still have the wisdom of the elders, but we have the energy and the drive of the youngsters. And I think we've made great progress on that.